Hey there, random internet strangers. It's Random Bitcoin Guy with the advanced version of the dollar cost average beast mode strategy. And you can find me here at uh, Random Bitcoin Guy at Forex underscore random. This is where you find me the most. I give out signals and different tweets, different things. Sometimes I'm just funny and not in a serious mood or anything like that, but I also give out free analysis of the market in general and things like that. And as I said, it's totally free. I don't charge anything for it. I'll just show people what I'm doing, and if you want to do it, that's great. And if you don't, that's fine. Or if you want to add or modify what I do, that's okay too. I'm just an average guy slugging it out, but I'm doing pretty well with this Bitcoin thing. So this is the dollar cost average advanced beast mode strategy. So let's move over to the chart real quick. I'm going to assume that you've already watched the first 3 videos. If you have not, I suggest that you stop this video and go watch the first 3 so you understand what I'm talking about, because I won't be reviewing much on here. So let's move on to this right here. This is the chart. This is Bitcoin USD weekly chart, and it's on logarithmic mode to make things a little bit easier here to read. And what I've done is I've marked off the halvings that have occurred so far on the chart. These are very important when we start adding indicators here for the dollar cost average beast mode strategy, so that we know how much of our dollar cost average we're going to add in. As you can see, here's the first halving that happened 28th of November 2011. You can see these parabolic runs that happen where everything stays way above the 21 SSL. This one actually kind of had a double peak here, the first one, and then it kind of tapers off again, and it'll go up and down, but not have these big parabolic moves like it does. And this usually happens about anywhere between the first year to a year and a half that this is going to start occurring. So when these halvings occur, is the next one was in July 2016. It's right up here, and this is the 20,000 parabolic blow off top here, and then this is when they added in the CME, the futures, the first futures market. And that's at that point, that's when I knew Bitcoin was going to be a legitimate contender, that it wasn't going to go anywhere. I learned about Bitcoin back in October of 2012, and it was like $10. And I didn't understand it. I was still thinking in terms of being not thinking in long terms and being a long game thing. I was looking more of it in terms of peer-to-peer exchange and as a trading thing, as far as like scalping and stuff. And the spreads were way too high for what I considered to be a good scalping thing that I could do. So once I saw that the CME, they were going to go in the CMEs, that's when I knew that Bitcoin was going to be around for a while. And I waited until this crash right here, and then I bought. And I was still trading back then, trying to outsmart the market and not hodl like I do now. And I caught a nice trade. I got it up to right around here, and then it went back down, and I was trading back and forth a little bit. Traded this, and then just before I saw the coronavirus dump that it was going to happen, I saw what was happening in China and all the lockdowns that were occurring there, and then I noticed the market in general was turning sour. So I pulled all my money into cash because I saw Dixie was moving up, and then this dump happened here, and then I got back in about here around 6,000. That's where I got back in. And when I was trading all throughout here, I was basically just breaking even, especially if you factor in taxes and stuff like that. I wasn't making any money, trying to trade this thing, trying to outsmart the market. But once I started hodling and understood the principle of hodling, and hodling, for more than just one halving, you want to go for at least 2 halvings. So that's an 8-year gap, and then all that time you're just adding into it. That's the whole idea behind dollar cost averaging. This is a long game strategy of money that you are going to put away that's going to be set yourself up for retirement. And because of stock to flow, you can, if you, depending on how much money that you put in, you can get ready for retirement within 2 to 3 halvings. Not a problem. So that's around 8 to 12 years. It might be more, might be less. Maybe it might take 4 halvings, depending on how much money that you're able to put in. But the important point is to put in a consistent amount week after week, day after day, and even hour after hour. I'm going to show stock to flow real quick. I know a lot of people has been getting Plan B has been getting a lot of flack about this, but you can see that when we were away several standard deviations away from stock to flow, when the price on the upside, everybody was all happy and cheering him on. But once actually he didn't actually come out with it till about 2017, till right around here. Excuse me. But as you can see, I'm sure everybody was happy when price was exceeding stock to flow. But when price drops below stock to flow, everybody freaks out. But it's not that much different. I mean, look at the difference here as opposed to here. It's about the same, maybe a little bit more. So it's actually undervalued at this point. And if you look at the same thing, but it's still following the path. And because what stock to flow measures is, this line measures, you think of this line, the regular line, this blue straight line, think of that as the supply getting constricted at each halving. Now here, and you see these steps up about a year and a half after each halving. It'll go up dramatically, and this is a logarithmic scale. So these are each time it goes up a tenfold from the prior level. So it's a quadratic function, however you want to call it, logarithmic. And this is just demand, the fickleness of humans, the greed and the fear of humans, and all the different outside influences, whether it be a China ban or whether it be some state, like El Salvador, you making it legal tender. All these different outside fundamental influences will influence price dramatically in one way, shape, or another. So with the China ban and all the FUD with Elon and everything else, what I personally believe that killed this rally, so that it didn't blow up off the top like it did over here or over here. What I think happened is definitely the China ban was definitely a big part of the influence in keeping this undervalued, keeping stock to flow undervalued, and Elon touting Doge as a means that got a lot of the retail, drew a lot of retail away from Bitcoin. In the long run, I don't think Doge is going to go anywhere, but as of right now, I think those two things truncated the parabolic blow-off tops, this particular parabolic blow-off top that should have happened here but did not, because of those two. Those are the two biggest ones that I believe that were issues. There were other things. There was all kinds of FUD. There's always FUD, but those were the two biggest ones. So let's go back here. I can mark this off. This was the last halving, and then I got a future halving right up here. I just extrapolated to about June of 2024. It could be earlier, it could be later. That all depends. It's not like set in stone every 4 years. It all depends upon the algorithm and the how many transactions and things like that. So that's all gonna go in here. So let's move on. That's enough of that bullshit. And let's open this up a little bit so we can see it a little bit better, so we can see these indicators. I'm gonna switch this over to the price chart, the regular price chart. So this is now linear. This is no longer logarithmic. You can see these last two, this truncated top here. So we got a ways to go for the next halving. So because of the supply is still constant, and it's not gonna get cut in half until we get to this next line. I suspect more just sideways, maybe some ups, maybe some downs, but I don't expect any parabolic blow-offs until we get to June 2024. I really don't expect any, and that's because of demand. Now, there might be, if there's some big legislation passed in the United States so that the corporations and everything can start adding to their balance sheet without having to they got this thing going in their bookkeeping where they gotta show the losses, but they can't show the gains on the Bitcoin that they hold on their balance sheet. It's really stupid in my opinion, but that's a big one that's holding back a lot of these corporations because of the laws and the legalese behind everything. And as Kevin O'Leary says, you don't want to be caught off sides. So I suspect more of the same in here until we get to these halvings when the supply gets cut. And that's when the demand stays the same or increases, but the supply is cut. That's where you start getting the parabolic tops. So that's something to keep in mind when we're going to add on to this next indicator here. So we already done the 20 SSL. That's how we normally do it. You can see the prior video on how to do the simplified version, but we're going to add to this. We're going to add another indicator. So we're going to go to indicators and strategies, and we're going to go Bollinger Awesome Alert R1 by Just Uncle L. This is the indicator that you want right here. It's called you just type in I think it's BBAWE, and it will come up in there. But any Bollinger, but this is the one we want to work. So we're going to add this indicator on here, and we're going to change some of the settings a little bit though, clean it up a little bit, make it a little nicer, and I'm gonna zoom in a little bit too as well, so you can see what's going on here. And I'm in the weekly right now. I have to switch this over to daily. I had to show you the weekly, but when we do dollar cost average beast mode strategy, we use the daily chart. So we're going to keep, as you can see, the SSL stays on the weekly chart as a weekly indicator. That's why you see all these jumps and staggers, but this is all smoothed out because this is on the daily, and so we're going to keep it on the daily. But we're going to change a few of these settings. So we go over to here to the cogwheel. I want to get rid of this fast MA. That's just going to be in the way. So turn that opacity down to 0 so you can't see it. And we are going to change the settings. We're going to change this inputs here. The Bollinger length. I like my Bollingers a little bit faster, so I bring it down to 17, 16. Doesn't really matter. Somewhere in that range. You can even, depend on how fast you want it. But right in the teens range is fine. We're going to use the EMA for the Bollinger Band. That puts a little bit more emphasis on the current candles, and we are going to get rid of some of these buy and sell signals. Where is that? I think that's on the next page. Give me a second. Everything else we can pretty much leave. Forgot the base multiplier. We want to change that anywhere between 1.5 and 1.9 is fine. I like 1.75, but this is just to squeeze the Bollinger Band so that they're a little bit more reactive, and the candles are going to go a little bit more outside of the Bollinger Bands. I'm gonna take it down to 1.7. I'm gonna take it down to 1.5. I keep mine on 1.75, but I'm gonna put it on 1.5 just to give you And I want to get rid of those buy and sell fill. So we got to go from there. Yeah, that's it for that. So now we got that in. Then we're going to go to style, and we want to hide the upper squeeze and the lower squeeze. This will get rid of the buy and sell signals, I believe. No, that's the wrong one. Was it this one? Yeah, it's a breakout down and breakout up. We want those gone. They're just getting away. You can keep them in there if you like. It's fine. I don't care. But I find them very distracting. So, and then we can go save as default. That'll allow that now whenever we find it that's going to be our default settings, and then we set it up and we're okay. Then we're all set. Now, the Bollinger Bands measure volatility of the price, the daily price. So it's set up on the daily chart. So it's set up on the daily price. And what we're going to do is this is going to fine tune it. In the simplified version, we're just doing 50%. If it's below the SSL, it's 50% more. So in between the SSLs, it's your dollar cost average, and if it's above, it's going to be less. Now we add the Bollinger Bands, and this is going to make it a little bit more complicated, but I hope you can follow along. Okay, when we are in between the SSL, nothing changes. It's all we're just going to do our DCA. It doesn't matter what happens in here in the Bollinger Bands. That doesn't matter. We're just going to keep our DCA normal when the price and the Bollinger Bands are in between there. Nothing changes. It's when it goes down below or when it goes up above the SSL. We're going to fine tune how much money we're going to put in. This will help us to get in when the prices are good, and to withhold some of the cash when the prices are on a parabolic run. So right now we are below the SSL, so this is a good time right here to show what this does. When price drops below the SSL and is below the midline, we are going to it's going to be 125% of your DCA. So when it drops inside this band here, the gray area, if we close in here, then we're going to go 150. We're going to hold it at one. Actually, my bad. Sorry, my bad. When it's above the midline but below, like in this area here, my bad. I got ahead of myself. This is where it's 125. This is where we're going to be 125. So we know it's good. We know it's a good price, but it's below the SSL, but it's not a great price. The price is moving upwards again. So we're backing off on the dollar cost average. When price is below the midline of the Bollinger Band, we're at 150. And so we're 150% of our DCA. So if we get into this band here, we're at 175%. So and these are the times where you really want to be, actually, that's not the time where you want to be get really super aggressive. When you want to get really super aggressive is when you close outside of the bands. When you have a daily close outside of the bands. When that happens, the chances are pretty good that is a low that's being formed in. Now it doesn't always work out, as you can see right here, but we're in between, so that wouldn't have counted. See, that would have been a regular DCA day. Whereas when we're below the SSL and below the band, that marks a bottom. So at that point, you want to be scrambling, digging out money change from your couch cushions and buying. You would have been buying in at $35,000. Now, it doesn't mean that it can't go lower. It just means that that's a pretty good place where it's going to be a bottom. It's just proven over history, over time. And there's not a lot of time to get a full, accurate, what they call a set in statistics, because it's only been around for 13, 14 years now. So we don't have a whole lot of statistics to back this up, but we do have some. And so the more repetitions you have of something, and the more that something works over time, that's going to up your odds and up your probability that you're going to be able to find these bottoms. And then, like I said, this was a really good opportunity right here at 35,000. So that's where you want to be at 175 at your DCA. Now that only lasted a few days, and then we went back inside, but we know we put extra money in there. And then these are also the times that if you have some money set aside that you would want to put into Bitcoin. If you had some money set up aside, this would be a good time to do that at that point. Not guaranteed. Nothing's guaranteed. This is not financial advice. This is just something I put in a lot of money, right around $35,000. I can tell you what I did. I can't tell you what you should do, but I can tell you what I did, and I definitely put in a lot of money, around $35,000 in this area. So we spiked out at the bottom here. We haven't quite got capitulation yet. Where capitulation is just a fancy word where it's going to reverse. The price is going to reverse. And so we're just kind of meandering here, but we are starting to see a lot of pressure come up as the actual bottoms of these candles are starting to rise. We're starting to get, they call rising bottoms. Like one of my online mentors likes to say. But we still have kind of just a normal top here. Nothing. We don't have a higher high yet. So that takes care of the downside. Now let's look at the upside during a parabolic blow off. Let's go back to, I want to go back to 2020 because it's a little bit more clear about what happened. Actually, this is fine right here. Yeah, this is 2020 right here. Right here. See, this is the parabolic blow off top. A little bit after the halving, get a nice tight squeeze right here, Bollinger Band squeeze here, and then it'll blow up. And then another one here, which is where it turns blue. These are good areas where, you know, it could go up, it could go down. This doesn't dictate direction, just tells you that volatility is contracting, and then once it contracts, it usually springs wide open because it can't decide which way to go, and eventually it'll decide to go one way or another. That's what the Bollinger Band, when they turn blue, that's what these mean. So when we get on a run, like one of these parabolic runs, what you're going to do is see we're above the SSL. So now we're here underneath, we're still underneath the midline, but we're above the SSL. That means we're going to go 75%. When we're above the midline, we go to 50%. And if we are closing inside or above this, the gray part, if we're closing outside of it, we can go inside of it we go 25%, and here 0. Don't add anything. This is where so now we don't want to lose out on the runs, but we don't want to get caught at the top with a bunch of money and then have to wait forever. It's wasting time. So it'll go back in fairly quickly if it's not done with its run. It'll go back in. So but we never know where that blow off is going to happen. That's why when it gets outside these bands, that's where you want to go. And then as the bigger you make that number that I showed you back here, the bigger you make this number, the inputs, the base multiplier, the wider those bands are going to get. And so the less days that you're going to have. Like I said, I keep mine about 1.75 because I like it fast, but I don't want it too fast. See how it opened up the bands a little bit? So now I was only out for 2 days instead of 3. In this position, here's 2 days I was out here, and I'm back in. So I'm here. This is 25%. Now, one other thing. Why I marked off the halvings. As I said, you'll start seeing these squeeze plays happen right after a halving because the price can't decide what it's going to do, and then it blows up. And this usually takes about a year and a half where you'll see these blow up tops. It's just that this particular one was truncated due to the China ban, so we didn't get that blow off top here like we did in 2017. Now we got one here this was pretty close. That's a big candle, and what you want to see is a pullback, a retraction back there, but we never got that, so we continued to go, and then it got truncated. So I think this run would have been a lot longer had China not banned Bitcoin. So let's go back to, let me make this smaller, 2017 run, because it shows it a little bit clearer because we didn't have a big ban that happened. That's 14. Here it is. But you can see there were several days of just capitulation at the end of 20 after it touched 20,000 and then just dumped. After that, we were way above the SSL, way outside here. And if we go back and put the base multiplier, we cut that back down to 1.5 like I had it before. Squeeze the band a little bit tighter than I normally have it. You can see we wouldn't have been putting money in here. Now, and then we were still putting money in here, but only 25% or less. Now, what I recommend is once you start seeing those blow-off tops occur, to way back off, maybe even only 10%. And this is only after the first year and a year and a half after a halving. I mean, you want to wait until you start seeing it go on the move and then on the march, and then because you don't want to miss out, but you don't want to put all your eggs in that basket either. You know, it's better to buy on the dips, put your eggs in the basket on the dips, than it is to try to catch the rip. But we don't want to lose out on the rip, particularly the first one after a halving, because that one is going to more probably be the parabolic blow off top because of the supply shock that happens. Afterwards, you'll see these crashes. Then we can buy in again, and then we have the extra money in here. But you want to be a little bit more aggressive on the first one after the halving. Once we get above the SSL and we start trending, then you want to get a little bit more aggressive. So maybe bump that up to 35% instead of 25 or 50%, however you want to do it. Each individual is different, because the reason why is because it might, if we get into these parabolic runs, it might never return to even close to the same level that it did before, like it did with this one. And like I said, I believe this was truncated by China. This would probably hit 180, 190,000 in a parabolic blow off top had China not banned it. So we don't want to, and then it'll never come back to those prior levels of where we were at in the beginning. Down here around 3,000, we're never going to see 3,000, in my opinion. I don't think we're ever going to see 3,000 again. So we don't want to miss out on that first parabolic run. So you want to be a little bit more aggressive with your DCA after the halving. Then you back off and do the rule change as I got them set up, or maybe even a little less aggressive. That's all up to you. I don't do that, but I don't give financial advice. I'm just telling you what I'm doing. But I will hold to the rules that I stated in my prior videos until we get to that halving. And once we get to this halving, where it's going to be, and actually I got to go back to weekly to show that. I don't know exactly when. I just extrapolated to June 2024. Then I'm probably going to get slightly more aggressive if I haven't already retired and just said, living on a beach somewhere. But even then, I'll still try to figure out ways to make money and dollar cost average in, probably, more than likely. So what I would do is I would get more aggressive on even on the upside, maybe bump it up 10%, 20%, something like that, than my normal numbers that I would use here. So in review, let's go back to daily. I'll go back to daily, and I want to go and expand it out again so you can see a little bit more clearly. And this is a good area right here to show the different things. Okay, so this is the review right here. If you don't, my ramblings, if you didn't understand my ramblings, at least try to get this down. When we are between the SSL, nothing changes. The upper and lower bands of the SSL, nothing changes. We are going to do our dollar cost average. When we are below the midline and below the SSL, we're at 150 of our dollar cost average, 150%. When we are outside the bands, we're at 175. If you want to get really aggressive and get way outside the bands, then you want to throw the kitchen sink at it, 200%, whatever you want to do. But you want to be buying like crazy when you see accelerating outside of these bands. So that's probably a capitulation point. So when we are below the SSL still, but above the midline of the Bollinger Band, then we're at 125, 125% of our DCA. So we're still above average, but we want to start slowing down our DCA. Once we get above this midline, if we drop back below, we're back at 150. We drop back above, we're back at 125. Just back and forth. We've just been back and forth, and now we're starting to squeeze in here we're starting to get a squeeze here shortly. So that's for below. Now let's look at above. When we are above the SSL, we shot up here. We're above the SSL. Now we start subtracting our DCA. And these are the general rules. This doesn't include the rule after the first halving, after the next halving. These are just the general rules. We go above here. Now we're, but wait, sorry. Where were we? We are above the SSL. Let's see, where's a good spot to, it's not really a clear spot. We are above the SSL, but below the midline. That's 75%. We are, if we are above the SSL, but and above the midline. Now the price is accelerating more rapidly, so we don't want to put all our eggs in the basket because we don't want that, but we don't want to miss out on the rip either. So we're going to go 50%. We hit the bands 25%. Like I said, these are just arbitrary numbers, but what this does, if you've ever studied integral calculus, and especially if you do the hourly chart, what I'm doing is when you're trending up, you're going to have more up hourly candles than down hourly candles. So you want to set aside these dollars for when you have more down hourly candles than you have up hourly candles. So when we're down below the SSL, now we have more down hourly candles than up. So we want to be more aggressive when we're buying on the hourly or the daily. Or even weekly. You can even do this weekly. It's going to be a lot rougher and a lot messier than it does. It's going to be than if you're doing it on the hourly or the daily. So clear as mud, right? One more time through. 200%. 75, 175, 150, 125. In between the SSL, it's always your DCA, whatever it comes out to. In between these two lines here. If price is in between these two lines, there you go. Your regular DCA. Getting above the SSL, but below the midline. And remember, forgot, if we are in the SSL, don't pay any attention to it. Don't pay, the Bollinger Bands are applicable. It's just straight 100%. Going above the SSL, but below the band, 75%. Above the midline, 50%. Here, outside the band, 25%. And that's it. Thanks for stopping by. Remember, you can click like and subscribe, and follow me on Twitter. And we'll see you soon.